Today, we will discuss how to do a letter of credit assessment. If you stay with me till the end, you will learn factors that determine letter of credit assessment, steps to calculate LC limit, and sample letter of credit assessment note, precautions and best practices for LC assessment. We have covered the operational part of LC in our previous lessons. You can check out the relevant playlists given in the description of this video. First, let's start with some important factors in the calculation of LC limit: usance LC and site LC. Assessment of LC primarily depends on whether it's a usance LC, that is, delivery against acceptance, or site LC, that is, delivery against payment, meaning the timing of handover of documents by the banker to the importer. Documents like bill of exchange, bill of lading, insurance, and others which the purchaser or the importer requires to release his goods. So there are two ways the importer can get the documents depending on the LC type. One, by making an immediate payment, which is called delivery against payment. In that case, you have to consider only the time required for transportation, also known as lead time for your LC limit assessment. Alternatively, the importer may be allowed to have a usance period to make the payment. In such cases, the importer will accept the bill and agree to pay at a later date, say after 90 days. The maximum time that can be allowed as a usance period depends on the operating cycle of the business. If the operating cycle comes to suppose 90 days, the importer cannot be allowed to have a usance period of more than 90 days. The maximum usance period allowed should be mentioned in the sanction letter. The usance period is taken into consideration while calculating the LC limit. We will see the steps of the calculation soon. In my opinion, inland LC and foreign LC assessment of a company must be done separately because of two reasons. LC is to be assessed on the CIF value of goods, that is, cost, insurance, and freight. So the import duty charged by the customs department, if any, must be removed from the assessment. You have to essentially deduct this from the total value of goods imported to arrive at the net value of imports. Otherwise, this will lead to overassessment. Next, the lead time or the transit time is certainly going to be much higher because the goods are sailing all the way from another country. So it will be inappropriate to average out the lead time of foreign LC and inland LC. Now, let us discuss the steps of assessment of the limit. Your assessment should start with annual purchases for the ensuing year. Let's say it's around 100 crores. Out of that, material imported is around 25%, which is 25 crores. Once you deduct the import duty component, if any, you get the net value of imports for the projected year. Then you calculate the average monthly import by dividing this amount by 12. Now, out of this 2.08 crores, suppose 1.08 crores is procured through acceptance basis and 1 crore might be imported on a payment basis. For the goods which are purchased on an acceptance basis, naturally there will be some usance time, suppose 3 months, and some transit time as well, suppose 1 month. You have to add them both to arrive the total time. Finally, you have to multiply this total time with the average monthly imports. This gives you the FLC requirement on a DA basis. Foreign LC calculation on a payment basis is much easier. You have your monthly purchase figures that you can multiply with the transit period. That's all. The calculation for inland LCs is similar. Import duties are not applicable here. For this company, the entire purchase is in LC, but many a times it might be 50 to 60% of the annual purchase. So you have to modify your calculations accordingly. The company was not procuring anything locally on a payment basis, so I have skipped the ILC calculation on DP basis. You may add that just like we did for FLC purpose. Now, once you are done with this, it's time for a quick comparison between the usance period you have accepted for the LC and number of months of purchase for the creditors from your projected balance sheet Excel. Why? Number of months for creditors shows within how many days or months the company is paying its creditors, that is, person or company who are supplying the raw material. And what is the usance period for LC? It's the same thing, isn't it? It's the number of days in which LC amount is to be paid for procuring raw materials. So let's say if the company is asking for a usance period of 180 days of raw materials of steel, at the same time it's projecting number of months for creditors as 90 days for procuring the same set of raw materials, then it is contradicting its own estimation. Be careful in these cases. For this company, it's requesting a usance period of around 4 months and the number of months of projected creditors are around 100 days. Since both are comparable, we may accept the same. LC on sister concern or group concern should not be allowed. The purpose of a letter of credit is to ensure payment between two parties who don't trust each other totally for payments. So sister or group concerns should nowhere require LCs to operate between themselves. If allowed, this can result in kite flying. So opening of LCs across related companies is strictly prohibited, especially in case of inland LCs. Depending on the amount of LC, banks do ask for credit reports on the supplier from the reputed companies like Dun and Bradstreet, etc. Please check your bank's guidelines in this regard and follow it meticulously. The requirement of margin for issuing LCs should also be mentioned in the sanction letter. It usually depends on the track record and the credit rating of the company. Letter of credit for purchase of machinery or capital goods should be backed by borrower's own funds or term loans sanctioned for this purpose. Delivery against acceptance facilities should be allowed only to customers with good track record and with sufficient security to back the LC amount. It is advisable to monitor cash flow of the company to ensure that the company has enough funds to make payment on the due date. The lead time or transit time should be taken as nil if the usance period already includes it. When devolvement of LCs happen in case of irregularity in the cash credit account, do not open further LCs. Take adequate margins and step that up in case of it becoming a habit. In worst cases, stop further issues. Mark lien on the drawing power so that usance bills are properly retired on the due date. If you have sanctioned fund-based working capital limit and LC limit together, don't forget to deduct the LC amount outstanding while calculating the drawing power. Otherwise, you will end up double financing the same set of raw materials. If you want to learn more about drawing power calculation for large borrowers, you can check out our earlier tutorial on the same. I hope that will be useful. Whenever a FLC limit is sanctioned, it is advisable to offer the borrower some form of hedging like forward contract to avoid loss due to foreign exchange fluctuations. The unhedged portion of foreign currency exposure needs to be reported quarterly in the format shown in the screen. If you want a copy of my assessment note, then follow me on LinkedIn. The link is given in the description of this video. Mention your email ID in the comment section and give your feedback too. I will send the assessment format to you.